Welcome back to the We Hate Money podcast, episode 4. Or maybe this is a bonus episode because King's here. Or maybe we just haven't figured out the format yet. But here we are again. Where's King? How you going, boys?
Doing good. It's been a couple weeks, right, since the last podcast, so got a
Yeah.
lot to talk about.
Yeah, it's been a fortnight. What are you up to, King? How you going?
Well, I'm just happy to be here where the rules are made up and the points don't matter.
How we do it. We hate money. Yeah, it's been 2 weeks because my kids, buddy, got crook last week, and then it's just an absolute nightmare to try and schedule it. So sorry about that. That's my fault, lads.
Oh, it's just good to be back. Life happens, you know.
Arnie, you
Can't be-
ever think about maybe giving your kids vitamins or something? Because your kids are sick a lot.
Wait, you know what? Compared to last year, which was an absolute nightmare, they are 10 times better than they were. And we are on the vitamins every day. We got the multivitamins, we got the vitamin C. But last year, coming out of lockdown and then into their first ever stint of daycare, we got sick, and I'm not even joking. I reckon it was every second or third week for a 9-month period. And my son had tonsillitis about 8 times in 12 months. He's a candidate to have his tonsils removed. So anyway, it's all good now. We are sweet.
Speaking of sick, have you seen Apple's PE?
No, I haven't been paying attention, but Wiz is talking. Like, what's going on with this space, you boys? Tell me about what's happened with Apple.
Well, a lot of people got overexcited last time we were talking about Apple. They thought it was going to zero because, I'm not sure why. And I think we said, hey, this might be a bottom for Apple. And sure enough, it's going into that gap from its earnings. So I don't know. I mean, I think it might try to fill that gap, get up to the 200 level again, and go from there. But it's getting pretty interesting.
Did they have a rock solid
What do you think?
earnings, or like what happened with it?
Well, what do you think, King, about the PE? Or did you say forward PE?
Well, it's definitely higher than its average, but it's not as high as it has been in the past. Apple was one of those cases where if you under promise and over deliver, it can sometimes save you. And I would say that their earnings reflected that a little bit. They definitely lowered the bar. They didn't quite get over the bar in all aspects of their earnings, but it was enough that it didn't tank too bad. But it's really hard to take down a stock that's owned by, what is it, 80% or 75% of all ETFs in the market. Like, how do you take that down? Realistically, take it down.
I think that it's just not. I think it just revisits previous buy-in levels where there's consolidation, and it either you have a lot of deep risking, and I think that's the only way it actually meaningfully drops. Just from my perspective over the last year. So if there's any reason for risk to return back to the market as a whole, I could see Apple having, a 20-30% pullback. But isn't that just like an extreme correction at that point? Someone tell me.
I mean, it's Apple itself is the same market cap as what the 270 bottom tier S&P 500 companies.
At the moment, its market cap is 2.9 trillion. So it is.
I mean, it's not. It's obviously not worth that, but maybe it is.
It's not, but maybe. What if? I don't know. It's like the PE is 31.5 and the forward PE is 28.3. King hit the nail on the head. Like, it's owned by so many ETFs and it gets bought on an average basis by every other, retirement account or whatever fund periodically per pay cycle. So, I mean, that doesn't mean they don't sell it as well. How does it come down? I don't know the answer to that question. Like, no stock could last in perpetuity, but there are some that have, you know, had a very like longevity. And will Apple be one of those ones?
U.S. Steel.
Oh yeah, and I was thinking Coca-Cola in my head as well. Like that's a very, you
Yeah.
know, but Apple's been around for a long time in its own right, but in its current iteration, you know, early 2000s. I mean, obviously it's been around longer than that, but I mean in its current business is what I'm talking about. So yeah.
Yeah, I think you have some stocks that are just going to stick around just because of how much, how many people have bought in its general exposure. So it's been around long enough for everybody to own some Apple. What can you do?
Well,
So the
go on, King.
the boomer perspective for a second. You've had stocks in the past, and it's been mentioned before that when you're the leader of the S&P, something generally happens that takes you down a peg, and those stocks generally tend to not recover terribly well, and they kind of just disappear off into the wayside. I'm thinking of like, you know, the oil stocks of the old. Yeah, they're great and they've gone up or whatever, but they're not like they were at the height of when they were in charge of the S&P in the 80s. Apple is one of those few companies that has managed to be able to go from a like futuristic growth stock into a value stock, into a futuristic growth stock, and then back into a value stock again. And it seems to fit really, really well, no matter which category you want to put it in. I mean, there are people that even use it as a defensive stock. And because it fits so many roles and it fits so many roles for so many different ETFs, it's really difficult to get people's psychology in the market is 99% psychology. It's really hard to get that psychology in people's head that, oh crap, I need to get rid of this Apple.
Yeah, I don't think that's what's probably going to happen to make it drop. I mean, you have people like Warren Buffett who have a significant exposure to Apple, and he has a lot of SPY as well, if I remember right, and that which is additional exposure to Apple. So I just I see people who, you know, they also, a lot of traders mirror what Warren Buffett does too. So I can see that if you're an Apple bear, it's just going to be a really long decades pursuit of gains, which may just end in heartache anyways.
And all the while they were paying dividends through those peaks and troughs that King was talking about, where they've gone through, you know, different maturities in the company life cycle and kind of reinvented the company life cycle in a way. They've just been paying dividends the whole time, or a lot of the time. So it's interesting to think about that company. But in other news, were you boys watching or listening or caught the afterwards, you know, summaries of Jackson Hole? Were you paying attention to that?
I skipped Jackson Hole this time. Last year, you know, it was a catalyst for something. This year, to me, it's more of the same.
Yeah.
Nothing's changed.
Did you watch it or catch anything afterwards, King?
My bingo card, my Jerome Powell bingo card got filled up pretty quick, and then I kind of you know, was doing the shot every time he said like data dependent or something like that. Yeah, I was pretty wasted by the time he got to the important parts.
Like as far as I sort of caught it after the fact because I was away. But yeah, you know, from what I understand, and correct me if I'm wrong, but he basically just sort of said nothing. Like as I understand it, he said still trying to fight inflation, still got the 2% target. And I think what some pundits have said, or what was left unsaid, was that they won't increase their inflation expectation from 2%. Like they're still going for that, but some pundits are sort of saying they wonder if it'll sort of settle around 3-ish, and you know the general public will be sort of forced to live with that, and then maybe the rhetoric or maybe the messaging from the Fed will change to sort of say between 2 and 3, and we're happy with between 2 and 3, but they haven't done that yet. So it was interesting the reaction to the to his speech in particular, because yeah, the S&P was trading very high in that session on Friday. Yeah, I don't know.
Yeah,
I can't remember.
it's even gone up. It's even gone back up today. It's just been recovering. There's a risk off, generally speaking, before Jackson Hole, and then Jackson Hole came, and we kind of went sideways. Now we've just been going back up since then. So I think people were unsure about Fed's messaging, which is ridiculous. They're so transparent. There's nothing to be unsure about. These guys don't want to surprise anyone anymore.
I think that's true, but also, as you and I have discussed previously, like, can we trust what they say? Like, like it's like thinking through. I think you and I discussed this in the first episode, but I know we've discussed it offline plenty of times. Going from inflation's transitory to we're going to have a soft landing to we're going to have a no landing, and then now we're going to have a bloody crash when the banks started to fail, and then no, now we're back to now it's all good again. So who knows if you can trust what they say? I believe they mean it. Like, I'm not saying they're lying, but they don't have a crystal ball either. They've got the best data in the world, but they don't have a crystal ball either.
No
Yeah.
rate hikes. No rate hikes until 2024, guys. Remember
I
that
wish.
line? That was a great line. I think a 2% inflation target is completely unrealistic, and it's not even healthy. Our average inflation, if you take out the hyperinflation of the 70s, has been 2.9%. So to get to 2%, it means that you want to run under the baseline that we've been running since 1946, and that's just not something that you're going to get to while also minding your other mandate as the Fed chair, as the Federal Reserve, which is employment. And I know we haven't seen the effects on employment yet, and it's perplexed the crap out of them, but at some point in time, they're going to get so angry that employment's not going the wrong direction to force their hand, that they're going to eventually make it go the wrong direction and force their hand to cut rates.
Yeah, I think you're right.
Yeah.
So go on, Wiz.
Well, yeah, just to jump in on employment, employment's still historically higher than the average. So they do have some room to have employment kind of let off some steam. But I think they're hoping there's some contagion in the market somewhere that's just gonna roll out and cause some damage. But no rate hikes, I think again they may have made a policy error in announcing that. They should just not say that. It's like back in 21 when they said, we're not even thinking about raising rates. And then they made the wrong call there. And then they waited too long to even start raising rates. And I just think that it's going to be another policy error, at least from the idea of them communicating. I don't think they shouldn't be that confident in their ability to project anything outside of 2 months, because they can.
Yeah,
I mean, I would just like to see them get the current data right too. I mean, the revisions that we've been having to like the previous months has been ridiculous. I don't remember a time in my lifetime where we've gone back and redone the numbers 6 or 9 months beforehand that drastically that we've been doing it recently. Like, we've been off on employment numbers by hundreds of thousands over the last couple months.
Yeah, it's not even that. It's like you have revisions so if you get numbers for last month, they also revised the numbers before, and then they keep doing it. So they keep back revising numbers months upon months upon months. Like, how many times has January's numbers been adjusted this year? Like, every month? I don't know. They have no business going back and making these large adjustments. It makes it look like they're trying to inflate the numbers for political reasons, which maybe that is what it is.
Yeah, You mentioning before about potential catalyst. Well, there's one looming, and we did speak about it last week, and it's the situation in China, which could be a potential cause for contagion. And those stories roll on with Evergrande, and Country Garden has formally come out and said, they lost 7 billion in a quarter, and sorry, maybe it was the first half of the year actually, and they have publicly stated that they're going to struggle to meet their debt commitments. I know there was news headlines recently about the Chinese government getting some agencies, some particular auditors to look into the shadow banking. Like they're basically acknowledging, like, we are looking into the shadow banking in China to try and get a handle on that situation. And so people are speculating about whether or not they're going to try and inject liquidity into that and save the system. Because I know last pod we talked about, the estimate in size of some of those off-balance sheet entities in China. So it's coming to a head there. That could be a huge catalyst for the world.
Yeah, it's going to be a kind of wait and see now, because when we get this news that there's going to be a default, when we get this news that there's further deterioration in those home lenders, I feel like you're going to see, instead of a massive, de-risking, I think you're going to have people try to turn it into a risk on, because they're going to think the liquidity is coming. There's going to be easing. There's going to be more injection by regulating authorities, and the big banks in China and all that. So I guess we'll find out. It'll be I am interested in the inflation numbers coming up to see how the disinflation in China is impacted. Are any numbers here yet? So I'm kind of keeping my eye on that. It's all part of the same global economy, right, fellows?
Well, China's kind of like a telescope into our future a little bit too, because they're experiencing a very extreme form of the demographic shifts and the deflation risk that we're about to experience. They have a generation that doesn't want to get married, doesn't want to own property, can't spend money because they can't find work. I mean, we talked about their youth numbers before, but nobody knows what they are now, because they're so bad, they're just not gonna announce them anymore. But then you've got a generation that has the money, that won't spend it because now they're retired and they don't have anything to spend it on, or they just don't have a need to, or they already have what they need. And we're about to experience that ourselves. And I think it's affecting us in a way that you can see unemployment doesn't go down, but we're still seeing the inflation numbers come down. And I think we're going to continue to see those inflation numbers come down over here, especially if China continues to have disinflation, because they make all of our stuff, right? So if their producer prices keep going down, that's only going to further drop our inflation numbers down here. But I just think that they're in an accelerated form of the same problem, the demographic problems that we're going to be facing in the future as well. We might want to learn with what they're doing, if it's working or not working, to see how we're going to react to it, just as they learned from us in 2008 with how our bank failures and our property values, and they kind of tweaked how they handled it later on as well.
Yeah.
I would say that it would be good to see how they tackle the demographics. To me, though, I am just not convinced yet that inflation is truly done in the U.S. We do have other trading partners that still have higher inflation. You can see in South America that there's still higher inflation happening there, but those may be more of political issues and political instability.
Well, the dollar
rather
affects
than
those
just
countries a lot too.
Well, yes, and of course, there's a demand in those countries for more US dollars anyways. At least, last time I checked, which was a month ago. But I mean, who knows? Uh, who knows what's going on today? It'll be interesting to see where, countries like Venezuela, Brazil, and Argentina are going. And then uh, interesting to see what's happening over in Europe as well. But I think that the inflation risk still exists. It's just, is there enough counterbalance from China? I think their exports have gone down last month, if I remember right, which may not help us as much as we think it could. If there's less people buying from China, then we're not importing those lower prices. But
Well, I mean, look at what happened. Look what happened with Europe, right? The disinflation that just suddenly happened in Europe. Europe sells a lot of stuff to China, and they buy a lot of stuff from China too, but so do we. But they actually export quite a lot of stuff to China too. And because China's not buying, the demand for their goods isn't there, and their prices all dropped. So that's probably the first thing that we're going to see is the disinflation in Europe is going to probably outpace ours first, and that's probably going to have a bigger effect of what happens with Europe is probably going to affect us a little bit more than what happens in China, but indirectly China's affecting Europe than affecting us.
yeah, I think that the main thing for me is we know it can take quite a long time for inflation to be fully resolved. If we don't have any, recessions. I mean, we had a manufacturing recession for a while, it looked like, and how it seems like now everyone's sort of like, oh, everything will get better, and over time it does. I need something a little bit more. Um, I need something that is going to say, yes, inflation's over. We can lower interest rates instead of we're just going to keep waiting and seeing.
Okay, well, I can give you this. For the first time in,
Decisive.
I don't know.
That's
Well,
it. I need something more decisive.
For the first time in a long time, or maybe ever, I don't know. I didn't really look into it that much, but I did see an interesting thing where they had GDP and they overlaid it with GDI, so gross domestic income.
Yeah.
And for the first time, gross domestic income and gross domestic production, they completely diverged. Income fell off the face of the earth compared to GDP for some reason.
What were the dates they had it up to?
What's that?
What was the date range they were comparing?
I think they were going up to Q2, so June.
Interesting. Wiz, earlier on you were telling me that you think October is going to be a big change, or something's going to occur in October. What do you reckon?
Well, everyone's going to anticipate September is going to be a red month, and I don't know. We'll see. I mean, we've had so many predictions based off of seasonality and previous cycles that they are right or they're wrong, and I really feel like you could maybe trade off that. I wouldn't, but I think October is going to be more meaningful this year than last year. So I think we could see either maybe some risk off into September, right? But let's say there's risk on. Let's say the market keeps climbing up into September, which is possible. And then we kind of, take some profits. And then I think October is where we'll actually see a shift. Are we going to continue our upward bullish trajectory? Or maybe we're just going to enter into more of a stagflationary mode, because that's the other problem we have is if we don't really get rid of inflation decisively, are we going to be stuck at 5% rates? Maybe inflation rebounds 3 to 4%, just sits there and continues to keep the Fed nervous enough that they won't cut rates. So we just bleed everyone dry. I mean, because that can lead you right into a recession over a long period of time. So I think October is going to be kind of decisive for the end of the year.
I don't know. I do not know. I actually like listened back to our podcast, and I said I do not know a lot in the last podcast. So now I'm conscious of how much I'm going to say it here because it's like,
okay. It's
yeah.
okay not to know.
Oh yeah, for sure. There's so many things I do not know. But
let's look at NVIDIA as an example of not knowing, right? Because it's whipsawed from 400 to 500 down to 470, 450-ish, maybe. I can't remember the more recent, the higher low it had, and it's going back up to 500 today. You can't, nobody knows what's going to happen. And that's just a good example of a more volatile example. But yeah, I mean, who could have predicted those moves?
Not me. When we were talking about it last time and sort of saying what's going to happen with NVIDIA earnings, I was fully expecting it to not be as good as they were. And it just goes to show that. Well, I think all three of us were in the consensus that, like, how are they going to justify, where it is at the moment? And now,
I think I declared a Tesla level accounting when I saw their numbers come out.
Oh, so fantastic and well audited.
Yes. Oh, yes. Yeah, it was great. No, somehow they got their revenues to go up from like 8 something billion to, record numbers they've never hit before, but their expenditures didn't change. I don't know.
Ah, yes, operating efficiencies. But no,
Well,
I know what you're saying. But yeah, like actually, if you look at their numbers now, and who knows if they'll be able to maintain it into the future. But my God, if they keep blitzing it, then so all of a sudden the valuation, they could grow into it. Sort of similar to the way we were talking about Apple, and we mentioned Tesla, and disclaimer, I own some Tesla. I don't own any Apple or NVIDIA. So, but it's just I wonder how that stock will go now. And everyone sort of wants to strike gold on NVIDIA. I think King said that last time, but I just, now that it's up where it is, I don't want to touch it. I'm scared of it. I'm very scared of that stock.
It's been a reaper of souls. I've seen a lot of very experienced traders get clapped pretty hard. Some others trade it just amazingly well. Like I don't even believe it. They've got to be using PDF editor or something. But it's, you either know what you're doing and you can trade it, or you know what you're doing and you're just not in the zone on it. And we all know somebody who tried to keep playing the downside as it went up from 300 to 500. That didn't turn out well for them, unfortunately. Yes, that was me we're talking about.
I didn't know if it was you or not, because it could be multiple people. Like in the Discords that we're in, it's a common story. The only person I saw prior to earnings play it with calls was that Space Cowboy guy. And I thought when I saw his positions, I'm like, this guy's mad. And then it worked.
Yeah. I mean, I had calls on NVIDIA after its earnings earlier this year, after its Q1 earnings. So I had bought some puts like the day after, because I figured out these, it's all bullshit. It's AI. It's a scam. And then I went, okay, maybe I'm wrong here. And I bought some calls and I made like 10, 15%. I should have held it because what did it go up like $100 over the next couple of weeks? Just could have kept rolling that stuff up. But and then I kind of stopped and I tried to jump back in when I felt like, oh, okay, the exuberance, the euphoria is over. And it would, the how you don't get blown up, how you don't lose all of your money is you accept the fact that you've lost money and you just move on. I
Don't trade to try to gain back what you've lost. Yeah.
Yeah, just take a new position or wait, sit back and wait. If you haven't bought anything to do day trading on, you haven't lost any money this year. Congratulations.
True.
And that's a win.
Yeah, I still Nvidia is still it's one of those things where my warning bells are going off, and I just tell people like China just issued a whole bunch of state-sponsored programs for competing in the AI space. They picked a bunch of Chinese companies that are going to compete head to head with NVIDIA. Biden just blocked the sale of NVIDIA's chips to the Middle East and into Asia so that they can't get in the hands of certain Chinese companies for various reasons. I would not bet that NVIDIA is going to be the only player when Apple seems to always be second into a market, but do it better. That's kind of their claim to fame. They come in, after BlackBerry, come out with the iPhone and then kill everybody. I could see them doing the same thing to NVIDIA, honestly. We've got Broadcom earnings tomorrow. Broadcom makes custom chips for the AI space, and they already guided last earnings that it makes up 10% of their business, and they're expecting it to grow. We're going to see tomorrow, I guess, if it did grow at all. You would think that with how much NVIDIA's business grew, that means that if they're also in AI, their business would have grown too, but we don't seem to see that a whole lot in a lot of other earnings. Funny.
We're gonna find out. I would like to, if I wonder what the ramifications could be. Maybe we get the AI bubble part two, where there is no actual breaking of the bubble, but it just inflates even larger.
Well, one thing's for
Because
certain, we're going to F around. We're going to F around and we're going to find out.
yeah, I am not going to F around, actually. I am just going to be patient and continue to not try to swing or catch anything. It's in God's hands, so to speak.
Funny enough, the F round and find out chart looks a lot like NVIDIA's.
It's getting to the point where it's ludicrous. It's almost comical if you look at the chart on a longer time scale. It it's not sustainable to me.
It looks like
Not
Cisco's in 2001. I mean, that's just what I
Yeah.
see every time I look at it.
Yeah.
Well,
there's
no, sorry, go on, Wiz.
Oh, yeah. I mean, we're gonna find out probably by the end of this year what's really happening.
I agree.
Um,
We will find out. So, but like, just wrapping up, boys. What are your thoughts on the market then, going into the next, month or two? Wiz, you said you're going to be patient. What are you thinking?
I think it's good to let things sort of work themselves out still. You can obviously, most people are already long via their retirements or
Did we lose Wiz? I think we lost Wiz briefly. Yeah, most people are long via their retirements. I am still doing what I do, which is if I see a company I like and it's hit a value that I think I want to buy it at, then I'll buy it. So at the moment, there's not many of those floating around. I still in Playboy, getting absolutely crushed. We'll continue to get crushed in that one. Other
inflation
companies.
work itself out.
Oh, Wiz is back. Inflation work itself out.
I'm still there's a bond there's not a bond that I don't like. I am a true believer that right now the bond market and the equity market are telling us two different stories, and I still think that the bond market is usually and almost always correct. So long bonds right now. I mean, what's the worst that can happen when you buy bonds anyways? You just hold it to maturity and get the money that you were promised.
True that,
Yeah,
mate.
sorry about that. I had a call come in and kind of kick me off.
Oh, you're okay,
Uh,
Wiz. I feel the air, but I sort of picked up where you left off. You wrap it up, mate, and then we'll sign off and say goodbye.
Oh yeah, just I think there's no reason to panic. Just chill out and wait for there to actually be something to trade, maybe something to pull money out into cash. But if you're if you're nervous, just take some money out, buy some bonds, or maybe put it into a money market account because that interest isn't going to go anywhere.
Truer words have never been spoken. All right. Well, thank you for joining us on We Love Money. If you like what Wiz King and I are doing, then hit the like, comment, subscribe, and the bell so you get the notification when we post. And yeah, we'll see you next time. What do you reckon, boys?
You said we love money.
Oh, did I? Oh no. We hate money. We really hate money.
Hate it.
Inverse Arnie. Oh man.
It's the only winning strategy over time that never fails. Inverse Arnie. All right. See you, fellas.